Okay, great. It's now 12 p.m. Eastern, so we can get started. I'm looking forward to this discussion, as I'm sure a lot of you are. So today on Ask the Expert, we have Peter Nez, a real expert, former BlackRock CIO and current Venom Foundation chair. I will bring up Peter, and if you can just introduce yourself to the audience, your current role, and a bit of the work you've done in your previous professional life, that'd be great. Thank you, Peter.
Thanks very much, and thanks for having me speak. So my current role is I'm chairman of the Venom Foundation, which is a layer 1, layer 0 blockchain project, and I'm also chairman of the Venom Ventures Fund, which is a venture fund along with an accelerator program. Previously, I was CIO at BlackRock. Before that, I was global head of fixed income and global research at a place called Barclays Global Investors, which Larry Fink at BlackRock bought. And before that, I was a professor at Kellogg. So most of my career has been in financial services, from Goldman Sachs to BlackRock and now to Venom Foundation.
Thank you, Peter. That's a great backstory, and looking forward to hearing a bit about why you made the switch over from traditional finance to Web3, DeFi, the world of blockchain. So today's topic of discussion is bringing real-world assets on-chain. And real-world assets can really refer to anything that isn't a native blockchain asset. That could be real estate, could be treasury bonds, could be really anything that doesn't natively exist on a blockchain. So Peter, I wanted to ask, with your experience as former CIO at BlackRock, how do you see traditional financial institutions adapting to the growing trend of real-world assets to blockchain technology? How are these institutions adapting?
So I think what you're going to see, and you're increasingly see, is you're going to see institutions like Morgan Stanley, BlackRock, Blackstone, et cetera. They'll start with educational programs. So there's a pretty big learning curve for their clients, which are, in many ways can be quite traditional, global pension plans, et cetera. So I think there's a pretty significant education, and I think you'll see educational programs starting to be developed to help people get up and their clients get up the learning curve. I think you'll see the development of sandboxes, so there'll be a lot of experimentation to get people comfortable with it and figure out exactly how this is going to work. And then I think you'll see institutions start to develop the infrastructure that allows their clients to manage digital assets. Right? I mean, I think a great example is BlackRock's Aladdin platform, which I'm certainly familiar with. So they probably have 150, 200 global institutional clients on that platform, maybe more. They're basically implementing functionality around managing digital assets and portfolios, back testing, portfolio optimization, et cetera. And so that's going to drive institutionalization, right? Because suddenly all these clients that are already on Aladdin, they now can manage digital assets. So that's the kind of transformation I think you'll see in the space. Because I mean, at the end of the day, it's going to be the integration of traditional finance practices and expertise and domain knowledge mixed with deep crypto knowledge in order to drive the transformation to real world assets being tokenized, in my view.
Got it. And what do you think are some of the most, which real world assets are the most ripe for coming onto the blockchain? Where is the benefit? Where does that really exist? Is it real estate? Is it bonds? What is best suited to blockchain technology, do you think?
I think if you think of Web3 in general as sort of the exchange in economic value and a distributed ledger and a tokenized format, right? Then at the center of that are smart contracts, right? And so anywhere you see a friction around preventing that exchange of economic value, you're going to see the evolution of the blockchain technology remove those frictions. So let me just give you a couple examples. Like pretty much whether it's in trade finance, whether it's frictions between when a worker gets paid and when he earns his wages, whether it's the supply food chain, whether the producer of the food is pretty far away from the actual buyer of the food. There's broker dealers, there's aggregators, all in that food chain. And so where blockchain really, really helps is basically allowing you to remove those frictions and connect, for example, the producer of the food directly to the buyer of the food, right? And it's that combination between immutability, decentralization, and fractionalization, and that transparency. When those things kind of come together to remove a lot of those frictions. And so the other thing I think that is not fully appreciated is that everything on, for example, on the Venom chain, everything is a smart contract. And so the tokens are a smart contract. So that means the money is a smart contract. And what that means is you can actually program into the money the duration of the money, right? So you can solve this mismatch between the maturities that exist between getting paid and earning the wages, or whether it's the maturities of something to do with, BMW wants to buy parts from Turkey, and if they go through SWIFT, it takes 4 or 5 days. So they have 4 or 5 days of downtime till they get the part. Well, when it's tokenized and it's on chain and it's immutable and it's transparent, they can settle instantaneously, or they can program into the token the maturity they want. That's transformative, in my view.
Right. Yeah, I think there are a lot of inefficiencies that exist for various reasons in sort of the traditional financial commercial world that really don't have to be there when you introduce smart contracts. Like you said, programmable money. And I saw a speech by Governor Waller of the Federal Reserve talking about atomic settlement with smart contracts, where there's no reason to have this T+2 sort of settlement when you can program directly into the contract that it executes at the same time for the buyer, the seller, the deliverer, and receiver.
Exactly.
So
Yeah, I mean, it's so transformative. I mean, that's why I couldn't resist getting involved. It's like, I started my career at Goldman Sachs working for somebody that most people on this call probably don't remember, but Fisher Black of Black-Scholes, who started option pricing. That was my first boss, one of my first bosses at Goldman Sachs, and he created, the whole notion of synthetic replication. I think tokenization of real-world assets is as big or bigger than that.
wow, that's happy to hear that, and it's really great to hear that you really do see the power of this technology. Do you feel that Web3, blockchain, smart contracts, the whole sort of aggregate of this technology is the biggest sort of technological development in recent memory for the financial industry and other industries too, or is it sort of an incremental? Is this a quantum leap, or is it an incremental jump in your opinion?
No, I think this is more quantum than incremental, because the technologies still need to evolve, and they will, in my view. But if you think about the world of assets, right, the vast majority of assets are privately held, and so there's little access to them. They're not liquid as a result. They're not valued well, and frankly, the wealthy can participate in them, right? So if you think about, tokenization on a blockchain and fractionalization, you're going to see those assets now have a lot more access, be more liquid, be better valued, and you're going to start to create indexes of tokenized assets that people can then, somebody can get on their smartphone and say, I want this index, customize this index for me. So I think particularly when you combine that evolution of AI with this technology, the confluence of those things together as it's happening right now, plus just, the state of banking globally, the legacy systems, they're just so antiquated. So when you put the sort of the conditions of things right now from a technology point of view in financial services, and then you bring this technology, and then you think about how it interacts and intersects with AI, it's quantum in my view.
You brought up two really interesting concepts there, fractionalization and indexes, even custom-built indexes. Could you speak a little bit more about fractionalization first? How is this I mean, obviously people understand that you can't really fractionalize a house in the real world, but you can do that on chain. Just speak a little bit about that if you can, please.
Sure. So, I think a good example, I think there's, I think the two examples I really like. I mean, the obvious one that gets talked about most is commercial real estate, right? And so, a friend of mine is the largest commercial real estate owner in Canada. And, he owns a bunch of commercial buildings, right? And if he wanted to, generate some liquidity or either sell part of a building, it's a very long process, right? It's months and months and months. First, you have to find a minority buyer in the building, right, which takes months. And then there's only a handful of banks that you're going to deal with, particularly in Canada. And so they're going to have a lot of bargaining power. And so, from a asset management, like as a portfolio manager of these commercial buildings, fractionalization allows him to sell the first 10 floors, right? And of all his buildings. And so now his portfolio, he has a lot more tools to at his discretion to manage the portfolio of his commercial real estate. And then in addition, and one of the things I don't think there's enough voice around, in my view, is that blockchain is a sustainable impact important technology, because in many ways, in this context, you're going to deliver access to people that could never experience the economic value of commercial real estate, right? And a lot of people got richer by exposure to San Francisco or New York or, in the US and other places around the world. But that was rich people getting richer. But this is a democratization tool in that sense that, lower income people that make less money can now own a fraction of something and experience the increase in economic value. So I think that's very important, particularly in a place where it's so skewed like the US. And then, things that, just are going to start coming to light, in my view, is, the food chains, the tokenization of farms in emerging countries, and Africa, I think is a very big deal, because there's enormous frictions. The farmers in these countries actually end up getting like 15% of the retail price of their food. 15%, right? That's their margin. And they're the ones that produce the food, because there's so many people between the production of the food and the actual buyer of the food, right? Brokers, aggregators, everything else. And so when you connect the producers directly to the buyers on chain with transparency and everybody can see what's going on the chain, and the actual true state of the food is basically monitored across the entire chain. So the state of the food, just like the state of a building. And so what happens is the farmers get a lot more bargaining power and a lot more pricing power. So they're going to capture a lot more of the overall economics of producing the food. So it's, in that sense, it's very impactful in an investment sort of way.
Right. I think you start to see very quickly how this really is sort of a revolutionary thing, from fractionalization of commercial real estate, like you mentioned, which increases liquidity, which then allows you to use perhaps that as collateral, to people, dollar cost averaging $100 into real estate every month, rather than needing to be rich to get exposure to that. And then farmers removing the middleman between them and the end consumer, so both parties are getting a better deal. And this all being enabled by blockchain technology, by tokenization of real world assets. I think you've done a really good job of explaining why this is exciting and why it's really revolutionary technology.
Yeah, I mean, the frustration, I think, in some sense is Bitcoin, is, an interesting speculative asset to trade, right? I mean, okay, you can call it a store of value, but there's lots of store of values, right? Right? The couch I'm sitting on is a store of value in some sense, right? So, so it created quite a bit of confusion, in the sense that, my view is Bitcoin is to blockchain much like, search or pornography was to the internet, right? It drove early adoption, but the underlying technology is much more important. And technologies that remove important frictions and improve benefit for society, those are the ones that persist. And blockchain, in my view, is such a technology, and the institutions believe it too, right? I've talked to, whether it's BlackRock, or I had lunch today with very senior people at Morgan Stanley. They believe it too, and they're preparing for it. They're preparing for it because they know it's a quantum leap, and they know they have to be in this game. They cannot stand the sidelines. They can't.
Right. I think, as you said, Bitcoin sort of paved the way, especially with the introduction and release to the world of blockchain technology. But there's a lot more that you can do with it than just build a coin, essentially. And we're seeing a lot of that sort of come to fruition. And I think we will continue to see more. So obviously, there's a lot of interest from institutions and individuals. But how do you think regulatory frameworks need to evolve in order to better accommodate this tokenization of real world assets?
Well, I think, I like to use the examples of credit default swaps, which I know dates me, but it is what it is. So if you look back, at credit default swaps, it was a big deal for someone like us that was, managing hundreds of billions of dollars worth of corporate credit, right? And so suddenly you could actually short a corporate bond, right? And there was a lot of resistance, particularly from corporations, right? But the advent of the contract itself, much like a smart contract, was very, very powerful, right? And the innovation, the technology got way ahead of the regulation, because nobody knew, okay, what is this? right? And so it took, that was kind of 1994 or 5, and it took till 2003 before that market actually got normalized. And in my view, that time horizon and that evolution of regulation is quite consistent with what will happen with tokenization, actually. And so, one of the things that I think is important for people to understand is that the regulators are trying to figure it out, right? So, one of the great advantages that Venom has is a truly regulated layer one blockchain, right? And it has a true security token license, because in ADGM, where we are, they've really been very progressive about developing that framework. They just produced another white paper that lays out that framework for how to regulate a layer one blockchain. So people are figuring it out, right? It's not necessarily the most, it's a fairly complicated issue, right? But I think what will happen is that you'll see over time the regulation become, less complex and more simple as the understanding deepens. And so we at Venom Foundation, we partner with ADGM on a weekly basis to evolve that regulation, right? To understand, okay, what does it mean to have compliance? What does it mean to be audited as a blockchain? And so I think what you'll see is over time, you'll see that regulation mature and the frameworks become a little simpler and more standardized, right? And you're seeing like what's happening right now is, because of our relationships and my relationships in the U.S., we've created a dialogue between ADGM and certain people in the U.S. to basically understand and evolve the regulation together, right? I think one thing about the U.S., I mean, you can have your issues with the U.S. I do, actually, but you have to understand that the U.S. is going to view tokenization very different than crypto, very different, and they're going to treat Web3 and the evolution of Web3 very different than they're going to treat the typical crypto.
What does that treatment look like? It's a more favorable approach, I'm assuming?
Yes, much more. They're going to, in my view, they're going to embrace tokenization of real world assets because they have no choice. The other thing you have to understand is these asset managers, having sat in that seat, they're trying to figure out what do I do next to scale my business, because they're big, right? So there's not a lot of ways to go scale a big asset manager right now, right? So there's 2 or 3, but one of those ways, and the reason you see guys like Larry Fink out pushing tokenization now is, one, Aladdin's about to have the functionality he wants, right, for his clients, number one. Number two, there's not a lot of alternatives, right, to go scale the business. This is a way for the large institutions, whether it's, Morgan Stanley today at lunch, or the BlackRocks or the other asset managers. This is a way for them to scale their business. And so that's why I think it's inevitable. In fact, I think, that's why for me, we're kind of ending the Wild West regime in crypto or Web3, and we're in a transition. In fact, we're moving quickly into the early innings of the institutional regime, where you're going to see, scalability, chains that are scalable, interoperability. You're going to see increased participation by government institutions. All that's going to start happening in the institute, and you're going to see regulation, right? Because, if you want to be a stable coin in a country and partner with a large commercial bank in a country, it has to be a scalable platform, and it has to be regulated. They're not going to do it it's not regulated. And traditional structured finance businesses aren't going to move on to chain if it's not scalable and secure and regulated. I mean, they can't. So many of the chains just won't work, right? The beauty of Venom is it's a truly scalable chain. So that's what's going to and it's regulated. That's what's going to be required, and that's why I'm involved with Venom.
Okay, that's great to hear. So we've passed the sort of exploratory Wild West phase where people are figuring out what you can do with the technology. Its merits have been proven and recognized by institutions who've really sort of exhausted all the scalability options that they have in the traditional way of doing things, recognize the opportunity that this technology offers, and are working to incorporate that into their businesses. Okay,
yeah,
great.
And so I think what you're going to see is you're going to see partnerships, I think, in some sense, right? You're going to see partnerships between the people that, have a layer 1 or layer 0 chain with the people with the deep domain knowledge, and they'll start an entity, and then they'll start to migrate that business, say a structured finance business, over onto the chain that's scalable and regulated, et cetera. So that's, I think, how you'll see partnerships between, true blockchain technology companies like Venom Tech with, true structured finance in this example with real Web 2 domain knowledge. That's the only way I think it's going to work. And then I think, the institutions that I talk to, even conservative Japanese institutions I've talked to recently, they've budgeted $3 to $5 billion over the next 3 to 4 years for Web3 projects. That's just one institution. And, so there is not a major institution that I have talked to that has not now put multiple $1 billion of budgets into Web3. It's over. I mean, it's happening. It's just, I just tell you, the young entrepreneurs, like, look, this is happening, but you have to embrace regulation and you have to embrace security, and your platform has to be scalable. Otherwise it won't work, and everything has to be a smart contract. It can't be, it has to be in the contract. Smart contracts, I think, will get smarter, much smarter, and more dynamic, but they're going to be smart contracts. That's kind of the hero of Web3 in many ways, in my view.
It's the value add, and you really need to leverage that technology in order to be doing something different and powerful, I guess. So that's great to hear that you've been speaking with institutions that are really committing to this vision. What does the landscape look like in 5 years? Do we have a different chain for every institution, in which case cross-chain interoperability would be extremely important, or will everybody be deploying on major blockchains like Ethereum? How do you see that playing out?
Well, I think I don't think most of those institutions will develop their own chain. I think it's kind of the issue, and the reason you're going to see increased education is that the technology around chains and the talent that's involved in that don't really exist at a lot of these incumbent institutions, right? And it's not really in their interest to develop a chain themselves unless they can't adopt a chain that works for them. So I don't see people, a lot of these institutions, developing their own chains. I think a lot of chains that exist today will not exist in the future because they're just not scalable. Or they don't have stable gas prices. I mean, you can't build a business if suddenly your gas prices spike on you when you try to move money out, and you basically cost you more to get your money out than it did to that you made on the chain, right? So that's never going to work. And so a lot of the household names, quote unquote, if you can call them that, today, those chains will not work for real tokenization of real world assets at scale. They will never work, in my view. I looked at them all very hard because I got involved with Venom because I was thinking hard about launching a digital asset management platform. And I looked at those chains, some of which you've mentioned, and they don't work. And the people with real domain knowledge in asset management know they won't work. But when you have a chain that is scalable, where everything is a smart contract, where you can do chain on chains, in other words, you can have a permission chain and a permissionless chain, and you can integrate them together into a hybrid chain, then you start having a technology platform that will really work for Web3. The other ones just won't work, in my view. And so with bridging, I think at the end of the day, bridges, they're the ones that, this is the thing that get hacked the most. And I really feel like you'll drive more interoperability between smart contracts talking to other smart contracts directly and that's how the interoperability will be done across chain. I do think that chains, there'll be multiple chains, and some chains will be specialized for a particular thing. Whether that's, a chain very focused on asset management, or a chain very focused on stable coins, or a chain very focused on, the food supply chain, for example, or a chain focused on, employers and employment, et cetera. I think you'll see specialization, just like I think you'll see specialization in AI, right? I mean, ChatGPT is not going to be, that's a generic solution, but there'll be specializations, in my view, and those will be integrated with specializations of chains. So I do think you'll see chains that are specialized going forward. But I mean, I think there's other chains too that I think have a future, but the household names, I'm not convinced they have much of a future, to be honest.
Okay, interesting. I think it's also interesting that, obviously we talk a lot about interoperability in Web3, but I think there's a lot of work to be done to really get true interoperability between chains. And if we're going to have a future where there's many different chains, like you mentioned, an asset management chain, an employment chain, then you're going to really need that interoperability. So
Yeah,
I
it's a
think that's
big deal.
something.
Yeah,
Right.
I agree. I think that, a way to think about it, and the way I think about it from the Venom Ventures Fund and where we want to deploy capital, I think like a good example, I think, is payments, right? So right now, if you think all these merchants all around the world are going to build the infrastructure to be able to take crypto, I think that's a long time coming. But if you build the technology that says, oh, okay, I'm going to do instantaneous settlement, okay, and I'm going to pay in crypto, but as far as the merchant knows, I paid in fiat, because there's actually no reason that the merchant has to know you paid into crypto, right? And so I think you'll see payment platforms that basically allow you to show up anywhere and pay in a cryptocurrency, but the merchant's experience is, oh, okay, I got paid in fiat and I got paid right away. I don't have the, Visa, MasterCard delay and all that with it and all the headache. I got paid immediately, right? That kind of instantaneousness will emerge, and you'll see those kind of platforms emerge, in my view.
Right.
Which
That's
is a
sort of
big deal.
seamless.
Yeah,
The merchant's not converting Bitcoin to pay
yeah.
their employees. They're not worrying about Visa. Yeah.
It'll take years for them to do that. If that's their hope. That's a long adoption cycle. So technology will. I think what you'll see is that they won't have to. They won't care, actually. And so that's a big deal. I think. It's kind of funny. Not to get off on a tangent, but to be on a tangent. So it's for people like us, like me, in traditional finance, who manage sizable portfolios globally. We used to move our book around the world in order to trade, because we couldn't trade, right? Because time zones, because we were a global platform, so we were in multiple time zones. So the only way we could continuously trade our book was to pass it around the world, which is not easy. It's in digital, it's 24/7, every day, every day, all the year. It's crazy. It's great. It's a lot of work, but it's so effective. It's going to dramatically change the way assets are managed. Once you tokenize it, you can trade it. Once you can trade it, you can index it. Once you index it, you can write synthetics on it. That's transformative in a way that's never been transformed, ever.
That's great to hear from former BlackRock CIO. So that's a really exciting vision of the future. And what can you tell us about your future plans with the Venom Ventures Fund? What are you working to incubate to really foster with the Ventures Fund?
Well, so the venture fund sort of has two major components. One is the accelerator program, the grant and accelerator program, and that's really designed to drive things on chain, um, and really targeted around what we consider real good use cases, long-term businesses. So I'm violently opposed to the spray and pray approach. We're extremely research driven and due diligence, and I think we want to fund entrepreneurs that have a real vision for good use cases that could be long-term businesses that will be part of the, what I call the Web3 transformational ecosystem, right? That's really what we're focused on. And there's a lot of really interesting stuff. I think there's some, I think this is really exciting time, and you see some real talent with real vision who really want to be part of the transformation. So I find that quite exciting. I meet young entrepreneurs all the time, and I'm always impressed about what's happened. There's just so much to do, and it's a very good time to be an investor, and it's a very good time, I think, to be an entrepreneur. On the more of the venture part, it's really, I don't sort on, we don't really sort on stage. It's anything from seed to late stage. It really just depends on the opportunity. My view is, as long as we can do the homework, we should invest, whether or not it's Series A or B or C or D or C. That's not really what we think about. In terms of sectors and focus, we're pretty broad. We have a fairly sizable fund, so we have to be fairly broad. But everything from GameFi to DeFi but more specifically, we're also very focused on Web 2 to Web 3 projects, right? So, we're about to announce a pretty big project we're doing, where, we feel like we have the right chain when we have the access to the capital, and we can help a Web 2 company, that, is a traditional finance company, for example. We can help move them to Web 3. And so that requires capital. And a lot of our recommendations and advisory work is, okay, set up a JV with us and we'll help you migrate your business. And so there's that. And then we have the good fortune of being, in my view, there's only a couple of places that you could really do what we're trying to do. And so we have the good fortune to be able to have a pretty strong network locally. So we can help with bank accounts, we can help with getting people regulated and licensed, et cetera, to just accelerate this transformation. I mean, that's really our focus. Our focus is on, we want to be part of this transformation. It's a very, very, very big deal. And it's going to make things better for people, a lot of people. And we want to be part of that. It's really not more complicated than that.
That's really good to hear, and I think Web3 and entrepreneurs are extremely fortunate to have your expertise guiding them and really shaping the future of the industry. This has been a really great discussion about tokenizing real-world assets, bringing them on-chain, and like the future institutional adoption and current institutional adoption of Web3 and blockchain technology. Really appreciate your deep technical insights on this subject. Are there any other topics you'd like to cover? Any closing remarks you'd like to make on the subject?
No, I think I'm good. I think I probably have said my piece, but I'm certainly welcome any comments or feedback. I just feel like the more we can bring voice to the real benefits of blockchain and sort of work through the kind of confusion that exists, I think the better off everybody will be. And so I really want to try to be part of that voice. To bring that transformation, because it's important. It's very, very important, in my view.
I would definitely agree. This is an important transformation, and having experts shape the process is something that we should all really be thankful for. Thank you for your time, Peter. Really appreciate your insights, and we really look forward to continuing our work with you and with Venom, and the Venom Ventures Fund sounds like it's doing really excellent work in the industry. So thank you a whole lot for your time and your comments today.
My pleasure. Anytime. Thank you.
Thanks, Peter. Tune in next time for another Ask the Expert.